Hello, everyone. Happy hot PPI Thursday. How's everyone doing today? Good morning, Patrick. I almost said the wrong name. Good morning, Patrick. Good morning, Royal Palms. Good morning, John. Good morning, Sterling. Thank you for putting in Treasury Secretary's Besant's comments this morning. We don't need to review all those, especially with the hot PPI. We had initial and continuing jobless claims also. We're going to see if the market just shrugs off everything. A little snap reaction to those hot numbers coming out. Well, not initial and continuing claims. They came in slightly better than expected in a drop from prior. Good morning, Jake. Good morning, Jacob. Hey, Rick. Where French or Spanish today? Or hey, Rick. Let's do what language should we do today? Let's do Italian today, Rick. Can you put everything in an Italian, please? Good morning, Anissa. Thank you for putting in earnings. Deere and Company was a beat. Not that we care about JD.com, but it was a beat. Good morning, Dean. All right. Waiting for more people to filter in. Good morning. Hey, Patrick over on Rumble. Also, thank you for supporting the Rumble channel. Patrick in stereo. Patrick streaming on 2 different sites. Thank you. Advanced Auto Parts, and I was looking for a break above 61. There's a slight pullback. You should take a look at that pattern. It's really, I think it's a decent potential setup in AAP. So, PPI coming in extremely hot this morning. Market's reacting, but it looks like it's already trying to shrug it off. We'll see if it falls through after the open. Coming in at 0.9, consensus 0.2. Core PPI 0.9, consensus 0.2. Year over year for the core is 3.7. And the headline is 3.3. So, a lot driven by services. By the services component. Jobless claims, initial jobless claims 224, down from prior 3K. Consensus was 228. Continuing 1953, dropped from 1960, dropped from 1968. Consensus was 1960. So nothing shocking with continuing jobless claims. A bigger shock was the PPI this morning. So that's where that sits. I mean, it was hot across the board. But so that's where we sit. I don't have anything else to comment on. I just think that's going to feed into, by the way, I do have one more thing. It feeds into the PCE coming out at the end of the month, which should come in hotter than expected now. All right. What else we have? We have some bill auctions. We have a Barkin speaking this afternoon. And remember, tomorrow we have resale sales. So far, down. Amazon and Microsoft holding up, but everything else pretty red. Deere after their earnings is down close to 7%. Caterpillar also selling off in conjunction with that. Financial services selling off. If we look at the groups, everything, let's just refresh it. Everything looks, everything's red. Everything's red. The least red is consumer defensive, industrials, basic materials, technology leading it down. Fed watch still. Hold on. I got to refresh this. All right, so with that super hot PPI number, we're still at above close to 95% for a cut. A cut, still 3 cuts priced in. We'll have to see if that changes today. Fear and greed still selling greed. Schiller PE close to 39. Close to 39. Sterling did put in the key earnings. There was not a much going on. Again, check out the Advanced Auto Parts chart. I'll have to relook at that, but it was looking really nice from a potential break setup. Applied materials after the close. That's really well. This is appropriate for the market. Gambling.com, which brings me in. Did anybody see the tweet I put out yesterday? I mean, this was a legitimate, a legitimate thing that showed up in my email box yesterday. What was it? I was telling people to be careful out there. The bulletproof market can't be stopped. All right. Are we getting to the point where the bulletproof market, nothing can stop this market? Nothing? Are we getting to that level of complacency? Does that mean it has to stop today or tomorrow or the next day? No, but we're getting to just extreme complacency. All right, who else has come in here? Oh, there you. We got German now, Rick. We got German. All right. Good morning, Kevin. Still from Lakeland. Uh, I I think not my language. I did take a graduate course in Dante's Divine Comedy by an Italian. Okay, by an Italian professor. Oh, Dante. Yes. Good morning, Ted. Good morning, OD Green. So, thank you everyone again for tuning in. Let's get straight to it. I'm keeping an eye how it closes in relation to yesterday's low. We were already bouncing back. You can see the reaction of PPI right here. I'm in order for me to at least watch for a little more sustained bounce. We got to start getting above this 64.70 area. And then I'm looking 64.77, and then there's already pretty substantial resistance around the 64.90 area. So that's sort of the two key targets, the upside to the downside. I'm keeping a very close eye. We already came to the bottom of the rotation zone and bouncing, just dipping below the 64.57. So if we start breaking below that again and then can follow through below about 64.54, then I'm looking for a potentially bigger drop. The next key area would be around 64.27 to 64.36 for me. Below that, we come into a fair amount of support, but there's an end of a clear path move. The first is a breakout of the clear path move. So if you're using those targets, it'd be 64.27 area. Then about 6,400 is a very strong support level. It's also, you see the 64.27 level is right where the daily rotation zone is. And remember, we do also have OpX tomorrow. So we can see still some interesting price action heading into OpX. So if we really start dropping today and even follow through, my major line of sand isn't even back to 6,400. It's 64.27. Something shocking happens, it would be 6,400. But really, on any bigger pullback, even through tomorrow morning, 64.27. But before that happens, I got to see it break below the 4-hour rotation zone. The NASDAQ is flirting with the trend line. Head up yesterday to trend line, and the bottom of the rotation zone already came back down and hit a pretty significant level right about this 23,800. We start breaking that. If we start breaking below that, there's a little support shelf, 23,658, but the end of the clear path move is 23,631. So on any bigger sell-off, this is the key window I'd be watching. And where does that fall on the daily? That falls just below the 8 EMA. So that's the major level, but going into the open is 23,800 for me. On the bounce play, we start taking out about 23,870. We have very major resistance at 23,900. We get through that, then 23,960, which was proving to be very strong resistance all the way since yesterday afternoon, retesting this morning before the PPI number. I really want to see the tone after the open of how this market reacts. So, to see if we're actually getting a change in stuff. Again, remember, the market is bulletproof. There's nothing that can shake this market. The Dow nearly returning to the 87.5 level yesterday. Again, my major support even going into tomorrow is a 44,565 area. Not much to talk about the Dow. I'm just going to be watching. Sorry, I got to get the chart going. I'll be watching this 4-hour rotation zone for any dip in here, and then I'll go down the time frame. Any bounce in the Dow, though, is 44,975 is key resistance. Russell, little pullback to the breakout level. Hit the key target area yesterday, followed through. Straight to the key target area we mentioned yesterday. Now pulling back. Going to be watching for the support back at about 22.94. Already bounced off about 22.96. Going to be paying attention to that going into the open and seeing if we get any kind of buy bounce or if we retest those levels. But that is a very strong level of support. The VIX, I mean, technically, I'm watching yesterday's high. Why? Because it would be a potential %B buy in the VIX for a potential continued move higher. Now we do have OPEX tomorrow, but if we start dropping below yesterday's high, I got to shift back to bull mode. Gotta go, because we could just absorb this whole PPI print and be off to the races. That's the key thing I'm paying attention to. If we do dip back down today with the S&P, and Nasdaq especially rallying back. DAX, interesting with the DAX. This is a flat, broad bottom, but it does technically qualify on the daily basis. Again, this is the only halfway decent setup in the DAX. If it does, to the upside, it's got to get above 24,425 and sustain above there for a bullish play for me to 24,585 area. Other than that, the only other thing is a breakdown play. That is a valid double in the DAX. Potential double. Potential. The yield, the notes also do have a potential double top. Notes do have a potential double top, and the yields, potential double bottom. So keeping an eye on that today. Also, I was watching this. This is going to be, again, it's already broken above this. This was a nice little interesting, and I will use the %B buys at very key levels on 4 hours. So on the micro yields, the break above this 4-hour high bar, potential entry, now it's got to follow through. If it dips back down and comes back down to this, don't want anything to do with it. But if it sustains here, again, this would be something I'd aggressively be moving up a stop on because it's going against the rotation zone, but going to be keeping an eye in relation to this 4-hour high, just showing some things out there if people want to investigate it on their own. That's one of the things I will watch. And why, when I say key levels, well, look what it's done. It formed a double bottom, a potential double bottom, because it has not triggered yet or confirmed, and it is valid, and it's also against a very key support area. That's why, again, you can shift down in time frames from my perspective and look for a potential buy setup. Now, I can't stress enough, if this trades back down, especially after you open, if this market just wants to bounce back and the yields trade back below this, I don't want anything to do with it. Crude, technically, keeping an eye on this too. This is hyper-aggressive scalpy trade, but %B buy based off of yesterday's high. All right, we're right there now. That's a bounce play only. We are oversold. We're at cycle bottoms. This is a bounce play only into the rotation zone. Again, if it cannot sustain the high, I don't want anything to do with it. Just trying to clarify some of these setups. And counter trend, remember, counter trend is tougher. If you want to trade with the trend, then how do you use these? You don't trade the buy bounces. What you do is expect the bounce, and you look for the continued rally into the rotation zone and look for rollover sell setups. You don't have to take every trade. Remember, trades against the rotation zone are more challenging. You have to be very nimble and manage your risk reward very closely. Gold was here's an example. Gold, potential %B buy yesterday, got above it and could not hold the high into the close. Don't want anything to do. Don't want to hold it. Want to take maybe take a little loss. You know, the other thing you can do with these is if it breaks above the high, you can always unwind a little on the rally and then move the stop to break even. If it closes back below there, just, you wash the trade and you watch for the next setup. So what do we have here? Again, you got to be patient. And if it doesn't follow through, don't hold it just because in hope. Now, this has gone into a potential double. So, since the percent B buy didn't follow through, I'm now looking for this. We've got to, first of all, break above the highs of 34.20, just call it 34.24, and close above that. And then that would be another potential long entry. If that does not trigger, there's no long setup for me. If we also take out Tuesday's lows, I'm watching for something closer to the 50 in this trend line. We break below that trend line, then I'm going to be patient in between the 50 and the 62.5. Why am I not aggressively shorting gold? Because we have the support of the weekly rotation zone. We have, look at all the support coming in here. This would be super scalpy, and we're still at upside price action. So, again, the trend is up. Would not be shorting this. That's why I'm only watching for pullback or buy plays in gold for the time being. I don't want to trade against the trend right now. And that trading against the trend in gold is a lot riskier than even trading against the trend in crude. Hey, good morning, Heinrich. How are you? Hello, Charles. How are you doing today? We'll see what they do about it. Remember, we also have Jackson. Isn't Jackson Hole next week? We got Jackson Hole next week. So we got to hear what Powell, we had to hear the old J Powell next week in Jackson Hole. I think I agree. Don't care. Nobody cares. How do you decide when to enter on a break versus waiting for the close for the percent B? Most of the time in the higher volatility markets, I got to enter on a break and then, manage reward to risk real closely. And if it doesn't close through, take a small loss. Or try to scalp out of some if it's coming back towards there and at least keep a tight stop. And if it doesn't close above it, don't carry it. If you're not an intraday trader, you got to wait for the close. If you're not, let me stress that enough. If you're not an intraday trader, don't even bother. Just wait for the close. And by the way, if it closes and you can't get reward to risk to your target, then it's no trade for you. Again, not every setup is a trade, because if you can't get reward to risk, you don't take the trade. And don't change your targets and your stops. Oh, look, if I move my stop up and move my target way higher, look, I got reward to risk. No, you come up with your targets and your stops before even getting in the trade. Why do you do that? Because then there's no fudging it to try to massage it to say, oh, well, let me adjust this so I can get in the trade. No, you set up the stuff beforehand, and then by the time you get the entry signal, if it doesn't line up with proper reward to risk, pass on the trade. There's always another trade. The 99% draw strike on the downside is almost to the penny where the ES bounced this morning. Yeah, I did see that. Yep. And you know what? You can follow the option stuff. A lot of times it will line up, surprisingly enough, with these other key levels. That's how they become significant levels. So if you're not watching the options, I did see that, Sterling. Good day, Christoph. How are you? All right, let's keep going. Dollar index, by the way. And again, this would be a riskier play because it closed above the 62.5, but there is a potential percent B buy here. It's riskier now. We technically closed below the 62.5 and barely holding this trend line. I'm still watching it, but this is a riskier play. We have cycles at the bottom. Euro is actually a percent B sell with cycles at the top, and it's already broken below yesterday's low. We'll have to see if these follow through, because if the euro bounces back and gets back above yesterday's low, don't want anything to do with the euro short. Bitcoin, by the way, outside key reversal bar, breaking above that 120K yesterday, eking out a new high, and then a sharp reversal. There is still massive selling pressure, and today this actually reacted. It already was selling off, but then it reacted to the PPI. So again, a little risk off there. This has to sustain there. If this keeps going, I'm going to be watching to see if it can find support around 117. But if we start closing below there, this could turn into a pretty quick trap move for Bitcoin bulls. Spiders coming up yesterday to the key. This took off also the potential double top in the spiders. That is no more. Coming up to the key target cluster. So right now we're having a gap down. There's still 642.69. We're trading below there. That's key resistance now on the rally. And then if it does do a snapback rally, yesterday's close 644.89. Key support in here is 639.50 to 640. The Qs already took off the double. The Qs, little reversal there, gapping down 577.67. The key thing will be yesterday's low at 578.94 on any bounce, and then for 580.34 should it shrug off the PPI. That would be to the gap fill. The Qs, you can see that support base. The key area I'm looking at is closer to 577 for support. I'm watching the 4-hour rotation zone right there, and the spike high for Monday. All right, what else? Oh, Advanced Auto Parts. Did I just type Apple? I was like, that wasn't. Yesterday, breaking above. Now, this is gapping down after earnings, so it's got to regain. I will not be chasing this. This is gapping down, but if this can regain the 60-70 area over the next couple of days, I'll be interested in a long. If it can't, it's off the table for me. They did have the beat on earnings, but still no follow through. Why am I being cautious on this entry? Because it was between the 50 and the 62.5. But if it can regain these levels, then I will be targeting, at least for a stop raise, the 62.5 and then the 75 and the 87.5. If it can't regain it, there is no entry. Just wanted to clarify that. Yeah, I saw that also. Thanks for putting that in, Sterling. But it's also, we went to some risk off because we were already starting to trail down, and then it reacted with the NASDAQ. So hearing latest narrative that since border is closed, job gains will drop to 10,000-ish per month with no problem. Thanks for putting that in. All right. We got a couple minutes to the open. Again, for the S&P, it's got to get back through this 64.70 area. It's got to get back through there. You do have buying pressure. Look at all this buying pressure in here over the last little bit. Got a lot of buying pressure here. So, again, looking at that 64.70. But if we roll over and we take out this 64.60, 64.59 area, watch out, because all this recent buying pressure will probably turn into pretty quick selling. Other than that, let's just see if we can actually get a down day. Let's see. Also, the bigger picture thing, what I'm also keeping an eye on, besides the market being bulletproof, is we are setting up an RSI first divergence up here with daily cycles getting to the top and weekly cycles still at the top. So we may get to another top. Weekly cycles barely rolling over. Daily cycles, especially after OpX tomorrow, will be damn close to a top. So next week could get pretty interesting once OpX is out of the way. We've got waning momentum setting up another little topping area. All right, that's all I have for you. Hopefully everyone has a fantastic trading day. I'm just checking on the micro yields again. So far, nice follow through. That's going to be the thing I'm going to be paying attention to the first 30 minutes after the open. A lot in the micro yields. With that, I will talk to everyone tomorrow for OpEx Friday and retail sales. Retail sales also important tomorrow morning, but the day will be driven by option expiration. So Sterling, keep up your option research and be prepared to put in key strike prices tomorrow for option expiration, please. If work is not too busy today and you have time, I know you're following the option stuff very closely. If you can put in key strikes for tomorrow, I'm talking tomorrow's live stream, that people might want to focus on key strike areas. That would be very beneficial if you have time. And again, let's all give Sterling a huge shout out for everything he does for the channel. Thank you everyone for tuning in. Thank you, Patrick, also for tuning in over on Rumble. And I shall talk to everyone later. Bye for now.